So today we're going to look at how to pick the right broker. So in December, I had many requests from people that lost a lot of money using different brokers, either through brokers that they picked or through brokers that they had recommended. So the reality is too many retail traders are losing money as they pick the wrong broker. So in this live webinar, hopefully I will give you the tools to identify the right broker to use. To be honest, that is not very complicated. You have already many good brokers out there. Just make sure that you don't pick the wrong one. So as I just said, recently I came across many retail traders who lost literally a fortune after using the wrong trading platform. Why? Because they paid ridiculous fees or they put their own capital at risk. And by doing so, they lost a lot of money. So the problem here is not only that people are losing money after choosing the wrong broker, but as well, and I think this is really a problem to me, is because they were recommended the bad ones. So when you have been recommended with a broker, be extremely careful here. Who is telling you to do so and what could be the interest. So even if some people will tell you, I'm not taking any money out of it, I'm not getting any referral money, that could be something like some soft commission, and soft commission could be someone paying for your Bloomberg, or that can be someone paying for your presentation. So we need to be careful, and hopefully in the next hour or so, we will be covering all those points. So what we will be covering today is, first thing, we will try to look at what retail traders, if my Excel spreadsheet is good enough to my PDF, sorry, up, let's go back here. So it's coming, sorry for that. Almost there. So here you have a look. Okay, so what we will be covering today. Today, we want to be covering first, what are the retail trading numbers? So what is the reality for retail traders and when and how they are losing money? The second thing that I would like to cover, which I think is important, is to make the difference between a regulated broker and an unregulated broker. Then we will be covering regulated brokers in the US and in Europe. What you should be checking when we are picking a broker, how should be your trading platform, and then I'm going to go through two different examples to tell you how people could be losing money. The first one is going to be through the example of the minimum ticket, and the second one is going to be through the cost of financing. Then finally, I will try to show you how important that is for your broker to give you your track record. First, for you to know how you're making money, and for those of you who want to have access to the industry and show your track record to some people in the industry. So let's look first at the big picture. And the big picture here, I took the example from the Australian Securities and Investment Commission that did the survey in June 2018. So almost all countries have done those surveys. And as you can see here, the products are divided into three: CFDs, binary options, and FX. So this is quite a significant market in Australia because we are talking almost 500,000 customers with a turnover of 11 trillion, 2 billion in client money, and 97% of them are retail traders. So what do we have here? You can see that the binary options, CFDs, margins, FX transaction, the numbers are overall almost 250 transactions. The big chunk of the turnover obviously is done through margin FX or through FX. So the reality is, this is why you have so many educators, so many traders that think that they can be making money in FX, because as we will see later, with the use of leverage, obviously many people are doing FX. But still, what you can see, and I think this is the most important thing for any retail trader, is if you're trading binary option, 80% of the time, people were losing money, 72% CFDs, and the margin FX 63. So this is here a survey about how retail traders in Australia were doing across asset classes and over time. Again, as I told you, countries like in Europe, in the US, have done exactly the same surveys over the last 5 years, and the numbers are more or less the same. So with 70+% of retail traders losing money, and at the same time, you get a terrible feedback of the quality of the brokers. So in that sense, and there has been an improvement, regulators worldwide had and have done something over the last few years to improve the quality of services. So let's try to see in the next page, what is a regulated broker and an unregulated broker. By definition, a regulated broker needs to apply for a license. And under that license, they could operate under the license jurisdiction. And to do so, to have those licenses, they need to follow specific rules and regulations. Whereas the non-regulated broker has no license, so is operating under no license, and the constraints are greatly reduced, meaning much bigger risk for clients. So if you think about it, that is extremely tempting sometimes to go, for instance, for non-regulated broker, because they could offer much better leverage. The reality is, as we will see in the next few slides, you'll have to go for a regulated broker, because they are at least the less worst most of the time to save your money. Something that I want to make sure that you understand already, there is no 100% safe money when you put your money somewhere, okay? And if you think about 10 years ago with Lehman, with Bear Stearns, we are talking big banks. That was the same later with some other brokers that were regulated. There is never the 100%. Still, what you want to be doing as a trader, this is your first trade. Your first trade as a trader is to put your money somewhere. So if you put your money in the wrong place, already you are putting your money at risk. So what are the characteristics of a regulated broker? They might have more, but this is the ones that to me are important. The first one, which is key, is the segregation. So the segregation requires the brokerage firms to keep clients' assets, both the cash and securities, in a separate account from the firm's asset to avoid any confusion. So if for some of you, maybe they will remember that in 2011, MF Global, which was a regulated US broker, went bankrupt. And the reality, despite saying that there are segregation, MF Global was betting 6 billion plus on Italian bonds with clients' money. So at the end, I think clients lost something like 1.7 to 2 billion. Why? Because there is no segregation. So that means at any point in time, the broker could decide to take your money and be playing with it. So make sure, and this is why you want to have regulated broker, because there's segregation. The second one that is extremely important is the compensation. Obviously, you want, in a case of the company going under, someone or some regulatory body to give you part of your money back. So this is, you should be always asking, what's the regulation and what amount of my brokerage account is covered? So for instance, this is what we call the investor compensation fund. In the US, we will see later about the amount. In the UK, that is something like £85,000, and similar in Europe with 100,000 euro. The third point, which is important, is the anti-money laundering. And most of the time, what a regulated broker will ask you is a photo ID and a proof of address. Why? Because you don't want to see overnight your broker to be closed because they were involved in dodgy anti-money laundering. At any time, the regulator could come and say, okay, I close everything because they were involved in financing some dodgy operation. So this is the reason number 3 why we want to have the regulated broker. Then we got the leverage limits. This is something that I'll be covering in the next slides. The transparency. Why? Because you want your broker to be fully audited. So that is something important. If you go for a broker that is sitting on a dodgy country, it's going to be very hard for you to get your data, to get the numbers. Finally, this is something that has been increased and improved massively over the last few years, is the regulators have been asking the different brokers to put risk warnings. So that means before you open the account, before trading, all along those different steps, the broker should tell you, you are putting your money at risk, you could be losing X%. So that is a way of increasing the awareness of the customer. So what about the regulators? Regulators, here I look at the US. So the US is by definition the most advanced country in terms of retail trading, investment. We all know that. And why? As well, because there is a strong regulation. So you have different body. You get the FINRA, which is the Financial Industry Regulation Authority, which is looking at stock. You get the National Future Association. You get the CFTC, which is a very strong organization, which is the Commodity Futures Trading Commission. And what is important here is to say that the CFTC is independent from the US government and regulates all FX brokers in the US. So if you are involved in FX trading in the US with a regulated broker, you will be under the CFTC umbrella. So let's look at the non-US. For those of you who are sitting in the UK, you know that there is the FCA in the UK, which is a strong regulator. As just mentioned, in Australia, that will be the Australian Securities and Investment Commission. In Germany, that will be the BaFin. Then we get Cyprus, Singapore, Hong Kong, and as well Europe. So those are all the names. So what you should be doing, if you're adopting about which broker to go for, try to check under which umbrella your broker is going for. So now let's look at the regulated broker, the SIPC. So the SIPC stands for Securities Investor Protection Corporation. So as I mentioned before, in the UK, if your broker is going under and you want to recover some of your money, that could be to the extent of £85,000. For Europe, that will be €100,000. In the US, all broker-dealers registered under the Securities Exchange Act of 1934 have to be a member of the SIPC. What the SIPC does, it protects clients against the possible loss of securities and or cash. So if you have an account with a broker that is SIPC, you will be protected regardless of being US or non-US citizens. So this is important because that protects not only US holder or US customer, but non-US as well. And the protection, as you can see here, is much higher than Europe and the UK because it stands at $500,000 for securities and cash and $250,000 for cash only. So for all of you, or for those of you who are listening this morning in the US, I know it's pretty early, but I can see that there are quite a lot of you attending now. What you should be checking is if your broker is on that list, so SIPC org list of members. So the regulated brokers leverage in the US. Having a broker, now you want to know what is the leverage you can obtain if you are using this broker. So in the US, for the stocks, you are having, and if you get 25,000 USD capital minimum, you could be using 4-to-1 leverage. So that means $100,000 gross exposure, but that would be for day trading only. Otherwise, here, as you can see, it's only 2-to-1. So the reality, when you get $25,000 in the US, you could be long 25 and short 25, overall having a gross exposure of $50,000. So if you're not familiar with net gross exposure, I strongly advise you to look at it because risk management is extremely important. This is something that I cover in a big way in the 4x4 videos at the end of the process. This is something that is missing where people are really struggling. So think about gross exposure, net exposure, and how you're carrying the risk. So one of the way to having a bit more leverage versus Europe for the US is obviously to be using options. And having options, that will give you access to be able to control leverage and at the same time limit as much as possible risks that are inherent to stocks. And when I say that, is for most of you that have been trading already, you know that stocks could be opening up and down with massive gaps. And this is why very often we would like to be looking at options. For the FX in the US, as I already mentioned, is regulated by the National Futures Association, the NFA, where the leverage is limited to 50-1 on the major currencies and 20-1 on the minor currencies. So here, as you can see into this on this slide, the US will have limited leverage on stocks. And again, as I said, to get similar leverage as the one offered in Europe, for example, you'll have to use options in a much more important way than that will be in Europe. And this is why of the reason as well why the option market in the US is so well developed, and actually it is quite struggling in Europe. So for FX, after stocks, yes, the reality is you have lower volatility. For some of you that are looking more into risk management, you know that probably the average true range, the ATR for many major currencies over the last few months have been around 2 to 3%. So that's the monthly. But here you get big leverage. So even if the volatility is lower, we need to be careful when we are using leverage, because leverage could work both ways. But for people that are new to risk management, that can be a killer. So think about as well that Forex is offering, you know, a small universe versus stocks. So that is quite stunning to see that the FX trading world is so much bigger than the stocks, because if you think about the upside, my conviction is really the stock market is offering much more upside. So let's look now at the regulated brokers in Europe. That will be the European Securities and Market Authority, ESMA. So for those who have been trading for more than 2 years, you realized and you experienced from the 1st of August 2018 that there has been a change in leverage. There has been a change in being able to go short or long some products like the SPY, some ETF. Why? Because similar to what other countries have been doing, Europe realized that too many traders in Europe were losing money. So they decided to limit the leverage on the opening of a position by a retail client from 30 to 2. So here, if you look at this part of this presentation, for the major currency pair, we are 30-1, 20-1 for the non-major currency pairs. If we go back into the US one, as you can see, it is a bit lower, at least on the major currency pairs. So in the US, you have almost 40% more exposure or leverage possible on FX. For commodities, you still get 10 times leverage, and the same for non-major equity indices. 5-1 for individual equities and 2-1 for cryptocurrencies. So 5-1, let's give you an example. If you put 25,000 euro in a broker in Europe, that means overall you'll have access to 25 times 5, which is 125,000 euro gross exposure. Again, this is gross exposure. So, but what is interesting as well, and I think many changes from regulators happened at the same time that binary options and as well cryptocurrencies were starting to get bigger and bigger. So regulators realized that binary options, 80 to 90% of the time, people were losing money. We are not talking 50% as binary should say, but literally people were losing a lot of money and very quickly. So the ESMA decided as well to regulate the marketing, the distribution, and sale of binary options to retail investors. Similarly, for the CFDs, which is something that offers leverage for retail traders, there has been now a restriction on the marketing, distribution, or sale of CFDs to retail investors. So this restriction consists of leverage limits on opening position, a margin closeout rule on a per account basis, and a negative balance protection on a per account basis. So here, that prevents the use of incentives by a CFD provider. So that is something that is a big improvement. So if you think here 5-to-1, which is for CFDs, in reality, most of the time in Europe, you'll get the standard is 4-to-1, which is, I think, very good for stocks. You don't need much more when you're starting, because if you think about it, again, I like to use the example of $25,000 or 25,000 euro. 25,000 euro times 4 gives you a gross exposure of 100,000 euro. If you divide this 100,000 euro by 2 to have your long and your short exposure, that gives you 50 by 50. And then if you want to limit your single position, that is good enough. My philosophy is, because I'm coming from the stock world, I think 30-to-1 for FX is just way too big. And I'm going to give you an example. Yes, you will have to lose all your money. You need a 3% move, okay, on 30-to-1. So that means a monthly ATR, and that means the chances are very low. But you could argue that a 1% move is good enough for you to already lose 30%. So it's not happening all the time, but if you do have like an ATR of 0.7%, 70 to 80 bips on the euro dollar, that means very quickly, if you get 5 days in a row that are wrong, you could be losing 80 to 90% on FX, and I think this is way too big. So there is still a long way to go. I think Australia is still working on new regulation, and that's quite funny, because when Australian mentees came to me, or Australian clients came to me, they say, you know, I want huge leverage. I'm used of, you know, having unregulated broker, and we go from unregulated broker to, actually I have to tell them, look, it has to be much lower than that. You need to first learn how to do the risk management. So the risk is some people will move from regulated brokers to unregulated brokers to have big leverage. I think I already tried to explain to you here that this is really, really a bad idea, and you should, as long as possible, stay with regulated brokers, because literally it's safer for everyone. So what do you want to have with a broker? So here, this is a checking list. As always, I'm naming a few in this one and in the next slide. Those are all not the only ones that you should be having, but I think what you should be doing first before picking any broker is doing your due diligence. Again, as I said, this is where you put your money is the first decision that you make as an investor. So what you're carrying when you put your money somewhere is what we call the counterparty risk. That means if the counterparty goes under, all your money could be gone for quite a long time. I'm telling you that because I've been through Lehman, I've been to Bear Stearns, and I used to have some money that was parked at SocGen, Société Générale, but that money was not parked at Société Générale, but was using Lehman Brothers. So it took me literally 2 years to recover that money. I recovered all of it, but we need to be careful. And again, the downside of all of this, there is not 100% security. But the first thing we want to be checking is the commission. Again, as I told you, I have recently 2 to 3% that came to me with massive expenses, massive commissions. And this is really one of the reasons as well as I want to be covering broker in this presentation, because really still, despite all their knowledge, those are people that have been trading for 5, 7, 8 years, people that have been going through different education programs. They didn't realize how much money they were losing by having the wrong broker. So the commission, and here I'm talking stock. If you look at Interactive Broker, which is worldwide, and this is a broker that I really like, for instance, the cost per share is 0.005 per share. So imagine that you want to trade 100 shares. That will translate into a cost of 0.5. The reality is even Interactive Broker has a minimum ticket, so that will cost you $1. But as we will see later, this is very low level. This thing, why I'm mentioning cost per share, some of you will know, but in the US, commissions are very often calculated in dollar per share. Whereas in Europe, it is calculated in bips or percentage, like you will be paying 0.05% or 5 bips. So imagine that when I started to work 20 years ago, when I was working for a hedge fund and when I did a long internship, people, if they had a recommendation, will have paid 0.2% or 20 bips on an order of 1 million or plus. Whereas these days, you know, if you go through the machine, if you go through DMA, which is direct market access, literally, as I was doing even 2 years ago when I was prop trading, you are paying something like 1 bip or below. So if you were trading the UK, you would be trading 0.005. So something absolutely ridiculous. So the whole industry benefited from that. Still, a retail trader could be paying stupid money. Okay, why? Because the broker or the bank will tell you, oh, this is a safe place and this is why you need to pay me. This is complete bullshit. You will find many good traders that have different and good structure. So here I got a question from someone. Is there different brokerage for intraday and delivery trade? Brokerage, yes, they are. Depending on the brokers, there are some brokers that will offer you intraday, overnight, depending on your volume. So for instance, Interactive Broker, if you do X amount of trades, you will have a discount starting, you know, after doing, let's say, $10 million plus of trades. So it's really what you need to figure out is what is your style, how many trades you're going to do, and what could be the best in terms of pricing. Here, if you have questions all along, please feel free to put them in the webinar chat, and I'll try to come back to you. So I give you here the example of Vodafone. So, and why I picked Vodafone is because Vodafone has an ADR. So an ADR meaning that Vodafone is both trading in the UK and has a listing in the US. So if you want to be buying, let's say at yesterday price, Vodafone in the US, the stock is trading $20.09. So if you want to buy 10,000 worth of Vodafone, meaning you want to buy 498 shares, that will translate into 49.98 shares times 0.005. So that will be something that you will pay with Interactive Broker. So more or less, you'll be paying $2.49. Okay. So let's do the same now in the UK, where in the UK, the stocks was trading roughly around £154.06. Sorry, 154 pence. That's good enough. And if you use the sterling dollar at 130.30, that will translate into roughly £7,500. £7,500 times 0.05%, which is the cost 5 bips to execute order in the UK or in Europe, that will translate into £384 or $5. Still, as you can see, it's 100% more than in the US. So yes, we can argue that on this kind of amount, this is absolutely pointless. Still, this is double if you start to do size, if you get the wrong number. And here we are talking about Interactive Broker, which is the cheapest, one of the cheapest version on earth. So imagine the difference that could make, as we will be covering later, if you are choosing a broker that is expensive. So as I mentioned here, this is the next point. After the commission, we need to be looking at the minimum ticket trade. So this is something that I'm going to be covering, and you could see, and you will see the pain that could come for the minimum ticket trade. I think what is important as well is the cost of trading options and the minimum. So recently, I have some people coming to me telling me, "Look, Greg, I'm trading the US, I'm trading options. And I asked them, okay, fine, very good. What's the minimum cost? They told me $50. $50 per trade on options. So again, if you look at the commissions, if you are buying anything non-market, you will be most of the time be checking the cost or the commissions. When you're going for your mobile phone, when you're going for your TV cable, you look at all the commissions. So why not doing the same when you are using your broker? So next one, broker, the checking list, still the same. So you need to be looking at the interest charge on margin loan. So here it's a bit boring and it's mainly about the charge, but literally if you don't look at those commissions, then they could add up very quickly. And you think actually you'll be losing money because your trading style, because your trading process is bad, but actually you'll be losing money because the costs are way too high. So interest charge on margin loans. So that means literally on when you are using leverage, how much you're going to be charged. Again, we're going to be covering and giving an example later. Interest paid on idle cash balances. So that's literally if you are cash positive. I think something that is extremely important for me as a trader, as a long short portfolio manager, and more importantly, when you look at special situation. So what the stocks you could be borrowing. So sometimes you want to go short a stock, either because there is a special situation or you think, this is obviously there is an opportunity and there is no stocks available to borrow. And that is a big frustration because you feel like actually there is a good risk reward, but you can't do that. So make no mistake, for many professionals, this is the same story. Most of the time you will have stocks available to borrow if you are working for a prop trading firm, and even though sometimes it's hard. But I think you should be checking when you're going to be opening your account. If, let's say, you are trading small and mid caps in Europe, are those stocks available to borrow with your broker? And at the same time, which is the second step of the stocks available to borrow, I think what is important and what's the cost of the borrowing. Okay, cost of the borrowing literally mean the more stocks are borrowed, the more expensive it should be. So if you think about any stocks that is where there is a big free float and easy to borrow, we are talking at 1% or less. But sometimes, and I think recently, I kind of laugh when I look at people telling me, you should go short an IPO, or you could go short a stock like Peloton 3 days after it's listed. The reality is there is no stock to borrow, or the cost of borrowing is just incredible. So then you can have a short squeeze. It's going to cost you a fortune. So in a sense, kind of the same thing that as a carry trade in FX. So be careful on reading the lines, reading of, I want to go short this IPO because for 2 to 3 days there is no borrow, and the cost of borrowing. I think what I like to check, this is as well for retail traders, what's the minimum capital you need to have on your account? Because some brokers will ask you to have 200, 500, 10,000. And if you have below those levels, then they will charge you a bit of money, or a bit more than a bit of money, every month. So then as well, we get the live prices cost. Some brokers could offer direct access to the market and no cost attached to that. Very often you'll have to pay for this. I think depending on your level of, let's say, commissions that you are paying with those brokers, they could offer you a discount, or actually could offer you that for free. So if I come back to the first question about, the different brokerage for intraday and delivery trades, that's the same. If you are very active, you will find a deal with your broker. Why? Because they want to keep you, and they will take these charges as a soft commission. What I think is extremely important, and many retail traders that are moving from one platform to another, when they are struggling first with this new trading platform, is you want to find a friendly platform. So in reality, you'll have some platforms that are very good for traders, meaning, very active people that need to have quick access to the market. And there are some platforms that are better for portfolio managers where the position is 1 to 3 months. You don't need to be that active. To give you an example, you know, when I was working as a prop trader, I used to have Bloomberg, I used to have direct access to the market, and there were two systems, okay? So some of the traders there were just saying, okay, I'm fine with this system, it's a bit slow, but I can put some orders. Whereas me, I wanted like a very aggressive system. So I wanted really quickly to be putting the orders. So really depends on your style, and obviously it depends on your mandate and what you are doing. What I really like is, even if I'm not that good with macro and all those things, is having an Excel API. Why? Because my philosophy is you want to see all your trades, and being able to see your trades and filter your trade and do the risk management and doing the screening. And that helped me massively over the years to understand where I'm making money, how I'm making money, or how I'm losing money, what's the cost. And having an API where you can have everything on Excel is extremely helpful. And this is why, by definition, platforms like Bloomberg, like Reuters are extremely helpful. And again, for me, this is very important to have a quick access and easy access to my trade history. So if I have a broker, and I know this is a pain first to look at what's my existing position, what would be, for instance, you know, my average cost, how much money I'm making, and then, you know, I'll be struggling to look at my past trades. This is a no-go. So you don't want to tell or to send an email to your broker telling him, oh, please, could you send me my trades for the last 6 months? Literally, you should be able to click on a button and having it immediately. So similar, as you want to have direct access to the broker, to the market, you want to have direct access to the broker. So there are two ways. Imagine that you are trading from home. Some of you might have a backup electricity, but some of you might not. Or let's say you have literally a problem with your PC, and the only way to execute an order is through voice or through email. So here you need to make sure of two things. You need to make sure that on the other end of the line there is someone picking up, because sometimes if you have a stop order and the stop order is not in the market and actually all the system go down, you want to call them. So make sure that they are there, that there is someone on the other line. And at the same time, you want to know what's the cost of putting an order through voice. So this is what we call through voice. This is important because, you know, if the order that is at $5 and you have to, let's say, 2 or 3 times a day when you are at work calling the broker and it costs you each time $50, $100, then this is a no-go. Okay. Finally, I think what is extremely important, and that's the same as when I was a professional trader, meaning you know, you're working with what you call the prime broker, where the prime broker is managing all your trades and you are executing the trades. What you have is you want to make sure of the quality of the back office and the trade management. So that means if you are buying Microsoft and the stock should be delivered in 2 days, that's easy to do. If you do a bit of special situation, if you get dividends coming, if you get rights issue, that means the timing is key. Okay, so I give you an example. If you are doing a rights issue, on the last day of the rights issue, you should tell your broker most of the time before 10 a.m. in the morning that you're going to take part in the rights issue. So if there is no one on the other hand of your email, that means you don't know if you're going to be executed. That's the same with the dividends. When are you going to get the dividends? What are they going to do with the taxes? So to me, this is extremely important because think about it, you're going to have more and more position. You're going to hopefully be looking at more and more different strategies, special situation, again, dividends, rights issue, and you want a good quality back office and trade management. So now the trading platform, again, those are some of the criteria that I want you to be looking at. Again, you want this platform to be user-friendly, quick to react, which is the same as being user-friendly, reliable. So you don't want to be in a position where you know, 10 minutes before the close, you can't have access to the platform, or they tell you you can't be trading this and this, or, you know, as we mentioned before, you can't be going short those 20 stocks because actually something is wrong. And then the different access to the different order types. So here I'm naming a few of them. So the market order, limit order, stop, trailing stop, TWAP, VWAP spreads. Here I want to make sure about something and which is important to me. So recently I had questions about different algos offered and what were my thoughts about algos. So here we, on that slides, we have some order types. Those are not algos, but those are all the orders that you should have on any decent platform. I think my struggle has always been over the last 5 years, people will like to have access to a fancy algo's name for order execution. And that was the case, you know, 2 years ago when I was trading there. You know, I had access to Morgan Stanley, JP Morgan, let's say Nomura, all their algos. And they were coming with some funny names. And all funny names, all different algos having something to do. So that could have been, you know, buying 20% in the first 5 minutes, or making the orders over 5 hours, spreading into 2 countries. The reality, and here I want to be honest, and maybe I'm going to sound a bit sarcastic, but I think for many retail traders, because of the size of their orders, thinking about algo is just a bit of a joke. Okay, so I can understand if you're a mutual fund and you need to execute, you know, 50 million worth of, you know, Tesla in the next 2 days. If you want to be buying 200 million of SPYs in the next 3 days, that you go with a VWAP that is, you know, aggressive when it's first hours and 2 hours. But if we are talking 5, 10, 20, 25, you know, anything below 100,000, you know, unless you are very busy with your life and unless, you know, you get 50 positions at the same time, I think algos are not for you. So there are some strategy that involves, you know, being long 100 stocks and short 100 shorts. So that's typically the quantitative, the quant people that will run those big books. Obviously, they are not going to do and execute this order, you know, one stock after one stock. So they need algos. But if, again, you are buying $10,000 worth of JP Morgan versus $10,000 worth of Citigroup, I think you can put limits, you can or put market order. You always need to be careful on the execution. Where you should be extremely careful on the execution is on the before hours and after hours. So again, not that long ago, many people came to me and said, "Oh, really, Greg? You can be trading before hours, after hours?" My broker is not offering that. So actually make sure for the US market that your broker offer access to non-trading hours as well. But in terms of execution, what is key, and this is something where I spend some time when I do the mentoring program, is make sure that when you're trading options, when you trade options, there is what we call a bid offer. So there is a spread between the bid and the offer. And what you don't want to be doing is, let's say the bid offer is 50 cents on the bid and the offer at 55 cents. If you want to be buying, you don't want to be lifting necessarily the 55 cents. So what you want to be doing most of the time, and this is something that worked perfectly for me over the years, is you want to be putting the orders in between. Okay, so in the mid, or maybe a bit more on the right-hand side if you want to lift the offer. Why you want to be doing so? Because you want to be doing 2 things. You want to be making the algos that are sniffing the orders that you are here. So that means you will find a price between you and him, or you will tempt the market maker. Okay, so make sure that when you look at option, when you put an order, let's say after hours, before hours, on the open, before the open or after the close, actually the orders go with the limit. But again, if you are a retail trader, and there is nothing wrong being a retail trader, there is nothing wrong by having a small big first, you know, If you tell me I want to go with this funny algos that is called whatever, I think this is absolutely pointless. First, what you need to concentrate on is your risk management process and so forth, but not which algo to use. So I want to give you an example, and again, this is something that I've covered over the last 6 months with different people. And this is the example for the minimum ticket. So in the next 2 slides, I will give you examples of how the cost of trading could impact your performance. You will tell me I know about it, so it's boring, but here, this is my style. I will use example. Why? Again, because very recently, several retail traders came to me and asked me to help them in their process. So if you come to me and you have been trading for years, obviously I want to be checking your process, and I want as well to be looking at your past trades. And when I look at your past trades, it's not to tell you, oh, you're bad or good, or you're doing something wrong. It's first thing first is I want to understand how you're making money. So if you contact me, it's not about me judging you. It's me understanding your style, understanding your sizing, your risk management, your holding periods, the names, asset classes. So, but in reality, retail or no retail, as traders, we might be reluctant at giving our trades because either we think that we're going to be judged, or we think that this person is going to steal our magic formula, okay, of making money, which is a bit of bullshit, but that's human being. But reality is like anyone. If you are struggling for more than 3 to 6 months, I know that 3 to 6 months later, you'll come back to me and you'll tell me, okay, I need help. Okay, so let's look at what we have here through the example of a minimum ticket, where I took the capital of $25,000. Okay, so if you get a $25,000, this is something that I've been using all along the 4x4 video series, because this is a good, let's say, benchmark for retail traders. That gives you an exposure of $50,000 long and $50,000 short. Here, the normal size, max size, I don't want my guys to have more than 10% concentration in one position. So that will be a position of $5,000. So let's make some assumptions here, where your average trades per year is 104. Okay, so you're going to have one buy and one sell every week of the year. So if you have a minimum ticket cost of $15, like many retail traders have, so be careful, it costs you 15 times 104, $1,560. So that's the cost with the $15 minimum. So now imagine the same, that you are paying 0.005 per share, like Interactive Broker is offering, and some other brokers in the US and in Europe. So if I calculated that through the S&P 500 for 480 stocks that I took, most of the time the stocks were into the average stock was $130. Okay, so if you are talking about an order of $5,000 divided by the average price in dollar, that will give you 39 shares. 39 shares times 0.005, so that's dollar cost per share, that gives you 20 cents per order. Or if we take Interactive Broker, that will give you $1. So, and even in the worst case scenario, so imagine you are only trading stocks that are trading around 10, you will pay on average $2.5 on average ticket price. So now let's look at the difference between the person who is paying $15 per minimum ticket and the other person that is using Interactive Broker or another one. So the person who is using $15 pays $1,560, whereas Interactive Broker will pay 2.5 times 104. So we have a differential of $1,300 on the year. So $1,300 versus your initial capital of 25%, that gives you 5% or more of loss of your initial capital. And this is on the year. So imagine that if I start with Interactive Broker, you start with someone that is charging you $15 minimum ticket, that we are not trading like crazy. At the end of the year, I will be saving, or I should have with the same trades, 5% performance more than you at the end of the year. Okay, so that's for the minimum ticket. So let's look at the second killer for many retail traders when they use those brokers that are charging you a lot. Same thing here. You have capital of $25,000, a leverage 4 times. So that gives you again the same exposure, 50 by 50, and the normal size is $5,000. 104 trades. Average holding 60 days. Okay. So let's take the example of the broker A when the cost of financing is 1.5% plus the benchmark rate. So if you take the benchmark rate, let's say you take the 10 years or something similar, the 2 years, around 1.5% or 2%, you have 3% cost. So the cost is 52 times $5,000 times 3% divided by your holding period. Yeah? So you get an overall cost of $1,300. Let's imagine now that you have the second broker. That is the broker B. And instead of paying 1.5%, you pay 3% plus the benchmark rate. Okay. So the benchmark rate, so sorry, I should have put 4.5% here. Okay. So that's 4.5%. So it's you have many brokers, retail brokers that give you 4.5%. Okay. So 4.5% with your benchmark rate give you 6%. So the cost goes from $1,300 to $2,600. And the differential, again, is $1,300. So if we go back to the previous page, $1,300 here, $1,300 here. So imagine that you are trading with this broker B, which is a decent broker, a decent name. And at the end of the year, actually, you'll be losing 10% more than me, both on the ticket cost and on the cost of financing. We are talking 10%. So why I'm saying that is, again, I've seen traders, they came to me and say, look, Greg, I think my process is here. I'm doing things okay. I'm not spectacular, but I don't understand. I lose money. And I keep telling them, you know, the best way to do it, look at your trades. No, I don't want to be looking at your trades. It's all about my process. And then I look at their trades and I realized that actually on their process, they are flat. Okay, so nothing spectacular. I'm not losing money, not making money. But every year, they are losing 10% because they are using this kind of broker. So imagine if you get $25,000, you leverage that, you're using cost of financing, you're using leverage, so you're paying cost of financing, you get a minimum ticket cost, then it costs you 10%. So you're starting the year, you're down 10%. So if you are a retail trader, okay, and you could, you know, on the first year expecting, you know, 5 to 15%, returns. Yes, we can do better, but let's start with 5 with 15. Okay, 5 to 15, and at the end you get to pay 10% of commissions and financing. You start the year at flat or negative. Okay, so be careful on that. This is really, I mean, those are the examples that are easy to understand. Otherwise, you know, people will tell me, oh, no, you're just making these up. Trust me, this is the reality. So another thing that is extremely, extremely important, both if you want to improve your trading process and for those of you who want to have access to the industry, and when I say access to the industry is either being, you know, supporting a trader, portfolio manager, or having a small book, it is important to get access to your track record. So what I'm amazed is when people are telling me, my broker, you know, when I ask him about my trades, it takes me 2 days, they don't give me anything. If you have anything like this, that is just insane, okay? You want to have access to your trades. So what means having access to your trades? Here, you don't need to pay stupid money to do that. Good brokers will give it to you for free. You don't need, again, to use educators selling this. I mean, this is important. If someone is coming to you and say, look, I'm going to give you your track record and it's going to be audited and blah, 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 this is not real. If educators do that and is claiming that it is providing security to you, that is just a plain lie. Okay, if you want to work in the industry or raise money, investors will first look at an audited track record from regulated broker, or will go through all your trades. So I give you an example. The company, the prop trading company that I worked for 10 years, if you go to them and you have 18 months, 24 months of a good track record that is on Interactive Broker, they will look at it. If you want to work for hedge fund and you get this conversation, if you tell them, I got everything on an Excel spreadsheet, they'll say, I'm not interested. If you tell them, actually, I have everything for the last 24 months on Interactive Broker, and here we are not talking paper money, okay? So it's not like, how do you call that, a demo account. So that's for real money. Then you get a good chance, okay? The way I started in 20 years ago, they first interview that was for a small asset manager, and they told me, Greg, okay, what have you done? And I say, like any of us, I will say, oh yes, I'm very interested in the market. I want to be a trader. And I said, and they asked me, yeah, but you get proof. And I gave them, you know, first I told them, you know, I've been trading them. And then when they asked me about my trades, I was able to show them my trades for real, in real world. So otherwise, you could do it yourself, okay? But more importantly, you should be using the right broker. So while you want to be doing that, this is something, again, I cover in the 4x4 video series, which is get all your trades and calculate your NAV and returns and Sharpe ratio. So next one. So what do you want on top of all of this? You want to have access to your track record audited. So here, this is something that I picked up from Interactive Broker website, where you have all the data that could be useful for you. So that's a nice NAV, almost $10 million. That's the ending NAV, where you can see how the returns have been doing, your net asset value. So trust me, many brokers like this one will offer you what's you're making money, where you're making money, how you're making money, and you'll be able to present those numbers to professionals. Okay, so let me finish with a quick recap of what is the 4x4 video series and what is the mentoring. So both are about learning how to consistently be making money over time. So what I've been doing for the last 20 years is trading long, short, small, big, prop trading, hedge fund, and my idea is I want you to be making money in all markets, so any market condition. So here I'm using a combination of top-down process where we're going to be using bottom-up, active trading, and special situation. So what is important to me as well is to be looking at all the asset classes, FX, bonds, commodities, but with a core portfolio around stocks. What is key to me, and this is why I've done this webinar as well, is I want to be looking at how to optimize your P&L, and this is why you need to have the right broker to do so. If you can't have access to your trades, you don't know how you're going to be making money, so you're just guessing. And you want to have a platform where you get a strict risk management. So in lifetime, you want to see the prices, you want to be able to put a market in the order, a stop market. So having those strict risk management products, tools are very helpful. What I want to be doing through the 4x4 video series and the mentoring, I want you to limit your downside and improving your returns all along the learning curve. So I think what is important is give you the process, getting the fundamental, and then we grow from there. If people are telling you something different, they are just liars. So what is the 4x4 video series? Some of you already that are today with us have done it. So it's 40 videos where you get 30 hours of footage and more than 45 spreadsheets. Why? Because I want you to be able to build your own infrastructure and to be fully independent. So what I've been doing is putting in all those Excel spreadsheets all the links to be building your process, your infrastructure, and this is not like I'm hiding anything that you could find. Okay, so important that you build your own process. So next slide. What we have, so this is more or less, you start with why retail traders are failing, Then we try to look at what is the GDP, how is the GDP working versus the economic cycle, and which asset allocation we should go for, the expected returns versus the realized returns, then a macro analysis, ID generation based on different filtering. Okay, so that this is important, where you want to be doing ID generation not only from macro, but being able to generate IDs on special situation, more volatility, meaning more trading, or from bottom up. Okay, very important, the bottom up as well. So that will lead into building, hopefully for all of you, a strong watch list, where when we've done the strong watch list, we have done the quantitative and the qualitative analysis. So we'll spend some time and good time on qualitative analysis. Then we will be looking at technical analysis and price action, because you can have an ID, but this is not a trade. And then finally, we're gonna look at the risk management, which is, I think, something that is core in the 4x4 video series, and how to optimize your P&L. So looking back at today, so this webinar is about to end, but I want to give you a quick conclusion, and I hope you enjoy this webinar. There is a question of cryptocurrencies. To be perfectly honest, I don't trade cryptocurrency. I'm not going to answer about specific name. For there is a question right now. I can tell you that this specific name is not the best. I think as a broker, I like really much interactive broker. There are others than that. They offer a good platform, cheap costs, and you can actually be managing money like a professional and selling your track record. Again, for crypto, for Bitcoin, I think the struggle has been for me as a trader on the opacity of the market, because there is a huge bid offer. There is, I think there is a big risk on the counterparty risk. So if I put my money somewhere, I'm not even sure that I'm going to get my money back. So this is something that as an investor, I don't like. But look, you can call me old style. If in 2-3 years time, those markets are a bit safer, maybe I will go for that. But at the moment, I think the risk reward for me is not good enough. And I'm not a single pony trader. So meaning that I'm a bit like fed up, and I got enough of those people that are trading two cryptocurrencies where the stock universe is in the US 2000 or more, same in Europe. So don't be the people. IB, I don't get an incentive. Okay, so that's a good question from IB. I tried to open a referral with them. I didn't go through the whole process. But literally over the last couple of years, as I've been independent in my mentoring program, I told all my guys to go to IB. I don't get any money out of that. This is really something, a system, a platform that I like. And to come back to your question, if at one stage I get an incentive for interactive broker, I think I should not have any problem with that, because at the end of the day, I strongly believe this is the best system. Okay, so if it is a win-win, why not? But the idea is not to be referring people just to make money. I'm not doing this job to get my Bloomberg paid or those kinds of things. Okay. So the conclusion of this webinar, because we are almost into the 60 minutes, you should be using a regulated broker. If you have access to stupid leverage, that means that your regulator is going to be unregulated. And that means here you do have like a problem of segregation, of getting your money back, of everything. So that might be tempting, but I think you should not go for it. At the same time, as I try to explain with the FX for the US, where you get 50 times leverage on some FX, being offered leverage does not mean that you should be using it. So before going into stupid leverage, make sure that you have all your understanding of how to use leverage, and more importantly, about your risk management. I think what is key to me is what products and assets you could be trading on that platform. So that means check everything. So Some traders, you know, they want to have access to the US market. You'll have many platforms that offer US market. If you want to be trading, I don't know, the German market, and you want to have some ball on the German market, then you probably should be looking what is the best platform to offer that. Okay, so that depends on your where you want to be investing and which product. As I try to explain over all those slides, is really spend a bit of time on cost of execution, financing, borrowing, and hidden costs. So before that you go and after, because you know, if you go for a broker, you close your eyes and you say, oh, I trust him. I think then you're good to have like some pretty big shocks. So what is important for me, and this is something that I've been doing over the years, I always review my trades, and reviewing your trades is not only about, you know, strategy, timing, holding period, but it's as well looking down in the P&L and what is costly. Okay, so I used to sit with next to a trader who was trading like huge sizes very aggressively, and he was probably trading like billions and billions, where I was trading only millions and not even tens of millions. But that means overall, in terms of cost, when on the year I was paying $150,000, he would have paid like, I don't know, 1 million, 2 million. So really, you need to make sure that what you have as a style, if you have a quantitative person and you have 200 stocks to buy and sell every day, and the minimum ticket cost is $15, then you're dead. Okay, so that means if you do those strategies that are very important in terms of putting orders, then you can't have those costs. So I think I strongly advise you, like all my mentees and all the people that are doing the 4x4 video series, is review the cost of the overall cost every month, cost of having the platform, cost of trading, any cost that is related and that will impact your P&L. And at the end, what is important as well is you want to have a quick access to all your trades and being able to have a hand on your track record, because your track record is going to give you a lot of confidence. So this is where you're going to see if your process works or not. And again, for some of you who want to have access to the industry, this is the only way, or sometimes the best way, to raise money or to find a book or to be an assistant somewhere. So I hope you enjoyed this webinar. I'll try to do more in February and in the months later. If you have any questions, please go on contact@gregoiredupont.com or on my website and ask me. I don't want to go too long today. 60 minutes is already a good format. I hope you enjoy it and give me feedback because I like to have feedback as well. Thank you to all of you and have a great weekend. Bye-bye. Thank you.